Hi, welcome to our channel of IGNOU Audiobooks. Indira Gandhi National Open University, School of Continuing Education, Certificate Programs, Certificate in Nutrition and Child Care, CNCC-1, Nutrition for the Community. Block-7, Quantity Cooking, Unit-31 Review of Food Service Establishment. 31.1 Introduction. In Units 29 and 30 of Case Study 11, you have learnt how Ramu planned and established a canteen in a school. His objective was to sell packed lunches and snacks to the students and staff of school in order to generate profit. Ramu's venture could be said to be successful only if he got a good number of customers and kept them satisfied with his service. He should also have made sufficient profit to repay back the loans and earn a decent livelihood. He can say so only after reviewing the performance of his canteen over the year. How can he review the performance of the operation of his canteen? You can recall from Lakshmi's experience that reviewing the performance involves comparison of results with the objectives or plan and applying corrective measures if necessary. Like Lakshmi, Ramu also prepared a budget and maintained records of expenditure and sales. He checked his sales income and expenditure against the budget or an estimate and finally prepared a profit and loss statement. The profit and loss statement helped him to finally decide whether his business venture was successful or not. This unit presents an interesting discussion on how Ramu reviewed his performance and came to know whether his unit was successful or not. Objectives. After going through the unit, you will be able to times identify the records that have to be kept in a canteen. Times describe the way of analyzing food cost and sales. Times state the importance and method of preparing a profit and loss statement. Times discuss the check control measures which help in keeping the expenditure within limits. Time suggests the corrective measures, if any, needed to generate enough profit after analyzing expenditure and sales. 31.2 Records maintained in the canteen. Ramu maintains systematic and accurate records of all the transactions and operations. These records were a clear indication of the performance of his canteen. These, when scrutinized, help to compare the performance with the standards and to take the corrective measures. Thus, it can be said that the key to any review process is the maintenance of systematic and accurate records. Figure given here highlights the importance of maintaining records. Figure: Importance of maintaining records. Look at the screen for table content. Let us now look at some of the records that Ramu maintained at each stage of operation, which helped him to assess his situation well. Purchasing. The first phase of the operation was that of purchase. Ramu kept a suppliers directory, i.e., list of the suppliers from whom he could buy the various items required for the canteen. The list included the names, addresses, telephone numbers, items available, and the terms of purchase of the suppliers. Such a list not only helped Ramu to locate the suitable supplier for an item easily, but also helped his cook to contact the suppliers for immediate procurement of items when Ramu was absent from the canteen. Purchase order form. Ramu also maintained record of purchase order forms. You may recollect from Case Study 1, Lakshmi had also used a purchase order form. This gives the details or specifications of the items to be purchased with their quantities. Such C1 haircut specifications help the supplier to deliver the right type of commodities. Ramu used the purchase order form in all possible purchases. A sample of purchase order form used by Ramu for buying provisions is given below. Look at the screen for table content. It may be seen from these purchase orders that the supplier got clear instructions for the items to be supplied and also gave the terms about the delivery and payment. This also served as a checklist when the items were received. Receiving. The items when received were checked with the purchase order and cash memo invoice to ensure that the ordered items have been received in good condition. The payment was made only after the checking was done. The assistant cook was in charge at the receiving point. He physically checked the commodities against the invoice to ensure that the items stated in the invoice were actually received. The invoice was then cleared for making the payment to the supplier. Most of the time, Ramu himself did the final checking of commodities when his cook brought the items from the mandi or when the items were delivered by the supplier at his premises. Storing. The goods once received were properly stored in the storeroom. At this stage, the assistant cook or the store in charge maintained a stock book. Ramu himself checked the stock book as well as the storeroom once in a week. In the stock register, one page was allotted to each item. The left-hand side of the page indicated receipt and right-hand side of the page indicated issue and the balance left in the stock. An indication was also given about the lowest level of the commodity at which stock was to be replenished. An example of a page of a stock book is given below. Look at the screen for table content. From this, served that Ramu purchased rice twice a month. He only bought Sela rice and used it for making batter for idli, dosa and uttapam. The amount was issued once in a week. You may note that when the level of the stock of the rice came to 1 to 2 kilograms, Ramu replenished it. The quantity of the items received was entered in the register from the invoices and the quantity issued was entered as and when issued to the cook. Proper maintenance of the stock book with timely replenishment of the stock ensured an uninterrupted supply of the raw materials to the cook and also helped to monitor the consumption of the raw materials. Producing food, Ramu also kept the record of the items made in terms of yield and the number of portions prepared. This was essential to check the sales and leftovers. To help him in the process, Ramu kept a systematic record of each day's menu and standardized recipes. Sales record. In order to keep the record of daily sales, he preserved the carbon copy of the coupons sold to the consumers. As you know, he used coupons of different colors for the different items. The coupons were brought against cash by each customer and were given at the counter against which the items were delivered. After the day's work was over, the total sales were checked with the help of carbon copies of coupons. Some sales were done on credit too, an account of which was maintained by Ramu separately. The leftovers were then assessed to check whether it could be incorporated in the next day's menu. If the quantity of leftovers was small, it was given to the employees for their consumption. He finally prepared sales record for a month and year, which gave information about the number of customers served per day per month and the total sales income in a day, month, year. A sample of a sales record used by Ramu is given below. Look at the screen for table content. Sales record of a year. Sales record for month. Look at the screen for table content. Thus that the records from the purchase to the sales helped Ramu to monitor his resources. The records also helped him to assess the situation periodically. Like Lakshmi, Ramu also transferred information from all these records to his account hooks, i.e. cash book and ledger, to get a clear-cut picture. For details regarding cash book and ledger, refer to Unit 28, Case Study I. Heck your progress exercise I. 1. Suresh is in charge of purchasing, receiving, storing and issuing of raw materials in a school canteen. He came to know that one of his suppliers has quoted less price for fats and oils but actually charged more after delivery. In order to get the actual picture, Suresh want to check his record. Can you tell which records should he check to get the idea of this discrepancy? 2. Lakshman has opened a small canteen in a college. He wants to keep record of his sales income. What information will he need for this purpose? You are listening to this audiobook on Audio Learn IGNOU. 31.3 Reviewing the point actual performance. Let us now see how Ramu assessed his performance. Like Lakshmi, he also analyzed sales and expenditure. Let us first look at the sales analysis of Ramu's canteen. Sales income, as you know, means the money he got from the sales of the items in the canteen. This helps to determine the trend of loss or profit in the canteen. Ramu checked the sales income in each month and also at the end of the academic year. Why do you think he did so? Reviewing the situation in each month was essential to know the trend and also take adequate corrective steps, if necessary. The assessment of the sales income at the end of the academic year became necessary as the canteen was functioning according to the academic year, and a review at the end of the year would give a more accurate picture of the financial position of the canteen. Let us now review the sales situation in Ramu's canteen. For doing so, we would give a closer look to the budget prepared by Ramu. He needed a capital of Rs. 30,000 initially to start his canteen. This included expenditure on food, labor and overheads for the first month. Ramu expected to generate funds for these recurring expenditure from the sales income for the subsequent month. He had predicted a sales income of Rs. 16,000 per month on the assumption that he would have 350 customers and that the canteen would be operational for 20 days a month and for 10 months in a year. He proposed to make items which would fetch him a sales income of Rs. 800 in a day. This sales income was not only to cover up the expenditure on food, labor, overheads, and maintenance, but also to provide for profit on a decided margin. A portion of this profit was to be diverted to REPA, loans. Let us now peep into Ramu's account books records to find whether he actually achieved his target or not. We will look at the monthly as well as yearly record of sales. Monthly sales record. We will observe the sales record prepared by Ramu for the month of July, when he first started his canteen after summer vacations, as an example. Like this, Ramu had kept sales records for other months also. Table 31.1, Sales Income in the month of July. Look at the screen for table content. If you scrutinize the daily sales, you will find that in the first few days of the month, the sales were low compared to estimated sales of ₹800 in a day. As the month progressed, the sales improved because the students got acquainted with the items offered by him, and on some days he could achieve a sales income of ₹775, much near high estimated sales a day. If you study the sales pattern carefully, you may observe that the sales are minimum on all Tuesdays. This is due to the fact that a few people were on fast that day. It is reflected in the sales of that day. The daily sales record also housed that the maximum sales of ₹800 was never achieved, giving indication that either all the expected 350 customers did not visit the canteen on any one day, or the item expected to be sold in a day were never sold in full. Like this, sales records of other months were also maintained. It was found that the expected sales income of ₹16,000 was not achieved even when the school canteen worked for 20 days and had an average of 350 customers in a day. This can be checked from the annual record of sales. Table 31, to gives the annual record of sales of Ranu's canteen for the first year. Table 31.2, Sales record for a year IB Ramu's canteen. Look at the screen for table content. He compared the Mal sales income with the budget. Refer Unit 29. Canteen was operational only for 198 days against 200 days predicted. This variation was due to some additional holidays declared by the school other than the gazetted holidays. Sundays, Saturdays, and vacations he had taken into account while doing the planning. The number of customers that he expected to visit the canteen was on an average 350 per day. From the table, you may observe that the number varied from 320 to 350. In July, the number of customers was 330 only. The lesser number can be attributed to the fact it was the first month only and the students were not familiar with the items served there. In the next month, the number of customers rose to 350, as by that time he was able to establish a rapport with the students, and the quality of food served in the canteen has also helped him to increase the sales. Thereafter, a number of customers ranged from 340 to 350. In the month of March and April, there was a marked decline in the number of customers. The reason for this could be attributed to the fact that in these months examinations were being held and the students used to leave the school early after the examinations and were not staying in the school during the normal lunch break. The number of working days in the table shows nearly an accurate prediction. Ramu could do as he could get information about holidays from the school authorities. Schools very often make a calendar of their academic year in advance, which gives the number of holidays and the number of working days in each month. The difference of 2 days was due to holidays declared at hot notice by the Educational Department of the government. The table also gives the total sales income for every month. The monthly sales income ranged from $10,900 to $15,870. A sum of $15,870 could be collected in the month when there were 20 working days and an average 350 customers visited the canteen daily. It was as low as 10,900 when the number of working days were the least in a month. When the number of daily customers decreased to 230, the sales income also decreased to ₹13,200. Therefore, the decrease in the sales income in any month could be attributed to the lesser number of working days in the month or due to the reduced number of customers visiting the canteen. It may be seen that Ramu was able to get these monthly sales income figures accurately as he systematically maintained a sales record every day. The sales proceedings in a day were duly checked with reference to the coupons issued by him and were entered in the sales book, which helped him to calculate the month-wise sales income. Let us evaluate the anomaly in sales more closely. It is clear from the table that his sales income fell short of the projected $1,60,000 for the year. the sales income being only Rs. 1,53,850. This deviation could be attributed to two factors. While calculating the projected income, the rationale was that the sales income would be Rs. 800 each day, and for 200 days the canteen would be working, making the total annual sales to Rs. 1,60,000. This amount was to be collected by catering to 350 customers, who on average would be spending about Rs. 2.30 per person in a day. From the table, it may be observed that the canteen was functional only for 198 days, 2 days less than the estimated 200 days of working, causing a decrease in the sales income by Rs. 1,600, 800 times 2. Further, on an average, only 340 customers visited the canteen every day. This meant that about 10 expected customers did not visit the canteen for the 198 days when the canteen was open. But while calculating the estimated sales income for the year, Ramu had taken that these 10 customers would also be visiting the canteen for the 200 days. The reduction in sales on this account came to Rs. 4,600, 10x 200x to 30. In this way, the total reduction in sales came to Rs. 6,200, Rs. 1,600 plus 4,600 rupees. So far we have analyzed Ramu's sales income from direct sales of items prepared and sold in the canteen. Ramu generated income from other sources also. One such source was the sale of ready-made items like cold drinks, chips, biscuits, etc. He earned profit from these items also, though the margin of profit was less. For example, he earned a profit of 20 pm per bottle on a crate of cold drink. Likewise, he made some profit in the sale of items like chips, biscuits, and sweets. Another source of income was catering on school functions like school annual day and other occasion like a school staff meetings. Though Ramu could not achieve his targeted sales income from the canteen, he compensated it by catering on these occasions. If you look back at the contract with the school authorities, he was allowed or expected to undertake any catering that the school authorities would request. In that academic year, Ramu catered for a few staff meetings and for the school annual day celebrations. For the staff meetings, he was asked to serve tea and to snacks at the rates it was sold in the canteen. During the annual day, he was to cater to the students and teachers a beverage and to snacks at the rate of Rs. 7 per person. Let us now see how much Ranu was able to get from catering on these special occasions. During the year, he catered a beverage and to snacks for 5 staff meetings for 60 staff members at Rs. 3.50 per person. Ramu normally served tea, samosa, or cutlet and a sweet like besan burfi or a gujia. 5 such meetings for 60 staff members fetched an income of Rs. 1,050. For the annual day function, he was to cater to 1,200 persons a beverage and to snacks. As the number was too large to be prepared in the canteen with his limited facilities, he bought the items from the market and catered to this group. He gave a cold drink, a samosa and a piece of cake to the students and staff as desired by the school authorities. The school authorities had given him Rs. 7 per person for this catering, which enabled him to get an additional sales income of Rs. 8,400. Thus, other than the direct sales from the canteen, Ramu made an additional sales income of Rs. 9,450, 1050 plus 8,400, by catering on these special occasions. Very often in a school, one gets a chance to do additional catering for staff meetings, parent-teacher meetings, sports day, annual day, or seminars depending on the activity in the school and their policy to provide refreshments to the participants. Thus one can not only run the canteen but also undertake any additional catering available. 3.1.3.2 Expenditure Analysis. We would now analyze expenditure to find whether his sales income was enough to cover all the expenditures he had to incur during the year. We will start with food cost. First, food cost analysis. Ramu analyzed food cost on the basis of record maintained for the expenses incurred on the raw food materials. Each day he noted down the expenses from the invoice cash memos that came with the purchased items in case of perishables. For non-perishable items, the cost of the items issued from the store was worked out. Such a record was important as in the canteen, like any food service establishment, the raw food cost was the highest compared to other heads of expenditure. Therefore, a proper monitoring of food costs was essential to ensure cost control. The food cost analysis for the month July is given below in Table 31.3. Table 31.3 Food Cost Analysis for the month of July. Look at the screen for table content. You are listening to this audiobook on Audio Learn IGNOU. If you observe the above table carefully, you will find that the food cost varied from 48% to 51% in the month of July. Ramu found that when items prepared in the canteen were sold, food cost was 48%, whereas on other days, when ready-made items were purchased from the market, the food cost went up to 51%. But on an average, Ramu was able to maintain 50% of sales price as the food cost. He was able to predict more or less accurately the number of portions of each item that would be sold and made necessary changes in the quantity of the items prepared, thus minimizing the leftovers. For example, on Tuesdays, he knew that the number of customers would be less due to a number of people remaining on fast, and accordingly he made reduction in the quantity of the various items prepared. By such forethinking and from the experience gained, he made dishes only in amounts that could be sold on a particular day. The food cost for the year was determined from the monthly food cost records. The total food cost for the year was Rs. 76,131, which was about 49.5% of the sales income. The food cost of the items served in the staff meetings was Rs. 525, which was exactly 50% of his selling price. For the annual day, the food cost came to Rs. 6,600, it was 78% of the selling price, as most of the items were purchased by him from the market. Labor cost analysis. Ramu, as you know, employed 1 head cook, 1 assistant cook, and 3 bearers. As mentioned earlier, he kept accurate record of wages paid, bonus and other facilities given to them. Head cook was given a monthly salary of Rs. 1,000, the assistant cook Rs. 750 and bearer cum utility worker Rs. 300 in a month. He had to spend a total of Rs. 2650, 1000 plus 750 plus 300 times 3 as salary. So he spent a total of Rs. 31,800 on labor in a year. Other than this, a sum of Rs. 250 was paid to regular employees for additional work in connection with the annual day, and a sum of Rs. 200 was paid to casual labor. Finally, Ramu calculated the total sum of money which was spent on labor by adding up all expenditures he made for this purpose. Payment of wages to the regular customers plus payment for additional work. By adding all these factors, total sum came to Rs. 32,250. Ramu also calculated labor cost percentage to make sure that expenditure on this head was within the prescribed limit or not. As you would remember, Ramu decided to spend 20% of his sales income on labor. Labor cost percentage is equal to labor cost into 100 divided by sales income. 32250 into 100 divided by 163,250 is equal to 19.7%. Overhead and maintenance expenditure. The overhead expenditure included the actual expenses incurred for gas, electricity, conveyance, paper plates and paper napkins, for staff meetings, and other miscellaneous expenditure. The money for the maintenance was set aside for the replacement of breakable items and for the repair of electrical gadgets. He had the annual budget of Rs. 12,000 for overheads and Rs. 12,000 for maintenance. Like other expenditure heads, Ramu kept a precise records of money spent on overheads and maintenance. He found that being the initial year when equipment was new, he had to spend much less on maintenance than expected, i.e., only Rs. 8,000 annual. However, as he knew he might need to spend more money on maintenance later on, he kept aside the balance for future use. His records for overhead expenditure showed that he spent Rs. 11,300 in the whole year, against the estimated 12,000. Here he attributed the savings to his being extra careful while using gas, electricity, water and other resources. So far you have read how Ramu analyzed his sales income and expenditure. Finally, Ramu prepared a profit and loss statement based on sales and expenditure analysis. 3.1.3.3 Making a profit and loss statement. Like Lakshmi, Ramu also prepared profit and loss statement to get an idea of financial situation for the year. Given below is the profit and loss statement prepared by him for the initial year. Look at the screen for table content. Can you comment on the financial situation of his canteen by looking at this profit and loss statement? Obviously, you can say that he is in a good financial state. He has earned profit, a little more than he estimated in his plans. However, it is to be noted that he could achieve a profit more than estimated in his plans by undertaking the additional catering for the staff meetings and the annual day. Check your progress exercise 2. 1. Lakshman is running a small tea shop in an office premises. He has regular customers who visit his shop and is able to earn the estimated sales income. However, due to some disturbance in the city, the office remained closed for about 10 days and his sales income came down drastically in the month of January. What measure do you think should he adopt for improving the sales in the month of February to compensate for the loss? 2. Asha and Lata are preparing profit and loss statement for their small-scale food service establishment. What information will they need for preparing such a statement? How will profit and loss statement help them in reviewing the performance of their establishment? 31.4 Are any changes corrective measures necessary? So far you have read that Ramu was able to achieve what he has set in his plans. This type of smooth operation was possible only because Ramu could effectively control the whole operation in the canteen through various measures or checklists. Recap 10 presents list of various control measures. Recap 10. The control measures adopted by Ramu in his canteen. The first point of control was at the stage of menu planning, followed by controls at the stages of purchase, receiving, storing, producing, pricing, and selling. 1. Menu planning. Times menu was based on the choice of customers. Times cycle menu was adopted to accommodate variation in season. Times precosting of the menu was done to ensure that it was within the estimated food cost. 2. Purchasing. Times seasonably available raw food items were purchased. Times most of the purchases were made from cooperative stores. Times appropriate methods of the purchase were adopted. Times specifications were prescribed for each item to be purchased to avoid any kind of ambiguity. 3. Receiving. Times items were checked with reference to the invoice. Times items were checked for quality and quantity. 4. Storing. Times the items were sorted and kept in appropriate containers. Times first in first out system was followed. Times the store was kept and in order clean. Times accurate records of receipt and issue were maintained. Times the store was kept locked to avoid pilferage, etc. 5. Producing food. In the production area, the control measures used were: times standardized recipes were used. Times a production schedule was prepared and strictly followed. Times the portion size was correctly determined. Times appropriate equipment were used to save labor and time. Times wastage was prevented by giving proper training to the employees and using leftovers in the next day's menu. Review of food service establishment. 6. Selling. Times the items were proportioned. Standardized labels were used for the task. Times coupons were used for sales. Times the number of items to be produced were accurately forecasted. These control measures or checklists at all stages of operation helped Ramu to achieve his planned target in the first year of establishment of his canteen. However, as was in Lakshmi's case, Ramu will have to bring in suitable changes, modifications as and when needed. After reviewing the performance in the first year, Ramu realized that he times should give equal consideration to catering on school functions and staff meetings, along with normal functioning of the canteen. Times introduce new popular items in the canteen and improve the quality of already served items in the canteen in order to improve the sales. Times should keep scope for 2 to 3 days of additional holidays while calculating the estimated budget for the year according to the list of working days provided by the school authorities. Times need not plan for 350 customers in a month uniformly in a year but take into consideration the fall in the number of customers in certain months due to various reasons. Times bring in suitable modifications in food cost percentage due to price rise or any other reasons. Times keep control or check measures for each stage of operation to keep expenditure within the limit. You are listening to this audiobook on Audio Learn IGNOU. 31.5 Learning from Ramu's experience. In this case study, you have seen the 3 phases from which Ramu had to pass through in establishing the canteen, i.e., planning, execution, and finally review of the performance. Here, in this unit, you have learned how Ramu was able to decide that the establishment has generated enough profit to repay back loans and have a reasonably good livelihood. He was able to say so only after he reviewed the actual performance of his establishment. From Rarnu's experience, you would have realized that reviewing the performance involves maintaining an accurate record of all transactions and operations of the establishment, analyzing the sales income and expenditure, making a profit and loss statement, reviewing the checklist or control measures adopted at each stage to find reasons for any discrepancy, if any. Finally, adopting a few corrective measures or changes if necessary to improve the functioning of the canteen. Thank you. We will see you in the next video.